going to not be in a co-op on the island, it's a smart play for them because they save money each month for those 10 years. Any other questions, Rick?
Could you talk a little bit about the type of down payments that are necessary
Sure.
for the fixed and adjustable and points?
Yes. And there's kind of two things to consider. It's the bank's requirement for down payment, but then it's also going to be your individual complexes. I don't know what yours will be. You know, I know that Rivercross requires 20% down on purchases. It's 20% down. The bank itself, we require 10% down for most of our conventional loans, and we have some Sony made products, some government products too that are coming in where, if you want to talk about those, they'll be established, in like about 2 months or so, but which is even less down payment. But if you can try to get the 10% or 20% depending on the complex. They haven't said yet.
I think it's 10.
You think it's 10? Okay. Yeah, because most buildings will have that limit. So 10 and 10 works fine. 10 and theirs is 20, which is fine. Actually, at Rivercross too, they have another stipulation that the people that do like refinances for money or home equity lines of credit or HELOC, they can't go over 35% of the value of the property.
It's total value.
What?
It's total value.
Total value of the property, which there's a little bit of a, without getting too detailed, but yeah, it's like because a little bit's owned by the, well, I don't want to.
They said 35%?
Yeah, they said 35% of the, they said 35% of the appraised value, they told us, okay? So, I mean, that's about a third, so that's usually good for people. I mean, the small units there are going for in the 500,000s, and that's for the studios. I've had appraisals coming up to 1.2 million for the for the 2 bedrooms, some of the 2 bedrooms, depending on where you are in the property. But if you think about that, a third of like 1.2 million is 400,000, and for a home equity line of credit, that's probably more than you need.
So have you done appraisals yet for Island House?
I have not. No.
Is that going to?
Yeah, when that is initially when they come out with the offering plan, they'll have someone come in and do their own appraisals to start, just so they'll know kind of what they're dealing with for the value of these, and so I don't know yet what those values will be. But then the bank appraiser comes in too, and they've been pretty close and pretty accurate from what they've thought, and to be honest, we were kind of talking before we started. It's like once one person's done a property in there and it sells for 1.2 million, well, the next person whose property is just like that, the appraiser only has like that unit to go by, so they're like, oh, this is 1.2 million too, depending, little adjustments, but they tend to be pretty similar for the similar properties. You won't get much of a sway. Hi, my name's Eric.
Hi, I'm Judy. I live in Rivercross.
Yeah, Judy. Hi.
Eric, I was at your presentation in the building.
Yes. No, I asked everyone else why they basically came tonight, so I just wanted to.
And I apologize for getting here a little late. You may have already answered this question.
Okay.
The HELOC that is being offered by Amalgamated, I think has a 6 months for a special rate.
Okay. Yeah, it does. It does. We have there's a program just for Rivercross now, and it's prime plus a quarter when you have a bank account here.
For the first 6 months?
No, for the whole thing.
Oh, so it's different.
It was different than on the last presentation, right? Because remember I said we were working on a product for that?
Exactly,
because
that was my question.
Yeah, because it was like we were at plus 2% and the other bank was at plus 1%. So now we're at plus a quarter %. So we're 3/4 better than the competition.
Plus 0.75%. So it's
no,
prime?
we're prime plus
plus a quarter.
Prime plus a quarter. If you have the payments taken, if you have a checking account, if you have your payments deducted from your checking, that's how you get the prime plus a quarter.
Okay.
If you don't have one, then it would be prime plus a half.
Okay, so if you have,
but it's like you said, it's a free checking account, so it makes sense to lower it a quarter just to have the money. Even if you just put the money in for that. We hope you put the money in for all your money in there, but you know.
And is that guaranteed for a certain length of time?
10 years, the whole draw
10
period,
years.
yeah.
Prior
And now,
to-
at the end of 10 years, it does go into a fixed mortgage, but you do have the, there's no prepayment penalties, so you could refinance that anytime, you could pay off that balance anytime as well. What I've seen some people do, I've done this about 20-ish years, after 10 years, come see me again, and it's like, Eric, I like having the home equity line of credit, give me another one, so they're on the same type of, payment structure, and that money just transfers over to the new home equity line of credit.
So the home equity line of credit is the same as a mortgage, or it's a different product, but it's the same
It's a
purpose?
different product. The only difference is on a mortgage, your payment will be, you'll get the money all at once. So the difference between, like, say, a $100,000 mortgage and a $100,000 line of credit. On the mortgage, you get your money all at once, and your payment will be the same for the whole duration of the mortgage. As long as it's not an adjustable rate, but 15 or 20 or 30-year mortgage, it will be flat. So, for example, if you, just knowing that some of the numbers off the top of my head, if you took a $100,000 mortgage out for 30 years, your payment would be just under $500 a month, like every month for the whole thing. But you get the whole $100,000 right away. With the home equity line of credit, it's the simplest way to think of it. It's like a credit card. Your limit on your credit card is $100,000. But just like when you buy stuff with a credit card, you can use it for, you can have $5,000 on your credit card, and then you pay the interest just on the $5,000. And you can pay off your credit card back to zero whenever you want. Or if you take a luxurious trip somewhere, you could spend the whole $100,000. Before I came in here, my parents were up in Maine, and they said, they're like, yeah, we're spending your kid's inheritance right now. So, okay, so they're up there eating lobster, doing whatever, but they're, so like they can put whatever they want on the credit card, and then you just pay the interest on what you use. So that gives you some flexibility on if you need money in the future, and you don't have to take all of it out at once. So, yeah, good.
How do the mechanics work? I had a nice session with Peru a few weeks ago, and really haven't filled out all the forms, but looked through them, and then Rivercross, of course, has its own.
Rivercross's thing.
Very detailed.
Yeah, the Rivercross packet is pretty detailed. It lends to the safety of the complex too, though.
Sure.
So it's like it is a little more paperwork, but a lot of the paperwork will be the same thing the bank asked for. So a lot of it is doubled, and I know today I was just giving people the applications of, one of the things they asked for is the application of the HELOC,
Right.
for us. So, yeah, which you have. So all the paperwork is a lot from them, but a lot of it's just doubled from what the bank sees as well. And those guys are very, very good. I know they legally have to be, but they're very, very good at keeping people's information to themselves. Confidential. They're very strict on that. And you remember you saw before I started last time that they even came down and made the announcement like, we legally don't represent the bank, and that whole spiel. And they actually they wouldn't let. I asked about, because there was like people that were realtors in the audience that worked at that lived there. Yeah, you know them. But I was told I couldn't introduce them legally because it might seem like we're associated with them, but they're just very good at what they do, and it's just a little extra paperwork, but it makes the safety. I've seen the opposite too, where they let anything go, and then you have a neighbor that forecloses on their property, and your property goes down the tubes, and that won't happen there because that place
So
is
do
really
both
well.
sets of forms have to be filled out before an appraisal comes in?
No,
What's the one?
for us, the paperwork comes in once you start the process. While the appraiser's getting done, you can get your paperwork done.
Oh,
So those couple of weeks, you have the 2-3 weeks, and you set up the appraisal when you want. Like when you want them to come in, they work on your schedule. They can go on the weekend. They can go.
and they're your appraisals?
Yeah, they're not from our bank. We have a list of appraisals that we use, but they're approved by the bank. appraisals as well. So, yes.
When appraisers come in that you send, what are they appraising? In other words, let's say they go to one apartment that has popcorn ceilings, kitchen 20 years old, and then another apartment has popcorn ceilings with a brand new kitchen. Are they going into that detail?
For the loans that we've done, and the fact that for the HELOCs, a lot of them have been around, 100,000, and the places are worth 800,000. They're not worried about the popcorn
I'm talking
ceilings
about the
and
straight
things.
mortgages.
Even the in the straight mortgages too, they're really more looking at comparables. It's like the three
Like
less
solar.
comparable sales. The square footage is more important, and and things like the height, the view. Also comes
So
into this too, but
you think they don't go into, because in a house,
yeah,
they're very
in the house it's
detailed.
more detailed. Yeah, they'll do plus 5,000.
Yeah.
They can do that too, but I haven't seen enough of them to see how strict they've been, because we've only had a couple, of those so far. But I'll keep you posted, on what
And
comes in.
does the person who is the seller, does he have the opportunity to see those appraisals?
They'll see them at the closing. They can see them at the closing, but
But the buyer
not-
sees it.
the buyer can
So
get a
the
copy
seller
of it.
doesn't
Yeah.
see it.
No, it doesn't get sent to the seller originally. I think they can see it at the at the closing, because it's part of the whole documents of everything.
Don't you see it as a HELOC, perhaps you're taking out a HELOC unit and then seeing the appraisal?
No, but that's you. He's talking about on a purchase.
Yeah.
On a HELOC, no, on anything that you do,
Yeah.
everyone here can get a copy of their appraisal. He's talking about the other side, like you're selling. It's kind of like that's really yours. Just like if you did a
No, I'm just
an
seeing how
evaluation.
it
Yeah,
works with apartments.
no, they won't see it. I guess they could see it at the closing, because it's like part of the paperwork that gets passed around, but not before. Almost like if you did your own inspection report for you on your property. That's yours to do what you want with. Yes.
For a unit that costs $255, 10% down, what would the mortgage be?
If it was like 250-ish, the mortgage would be, because it's 25% down. 10% down would be like 25,000. So if it was like 250, 255, it would be around 225 to 230, and the mortgage on that would be around 1,200, 1,300.
That's all.
Yeah.
I thought it was
Yeah, it's actually it's kind of a little less. Yeah, it's about that though. For 200 and say per 100,000, it's only about $500 a month. So it's like 500, and if it's 250, it'd be so you're talking like $1,100 to $1,200. Is that payment? So and remember, you still have your maintenance.
Right.
Too.
Right.
And that.
And the
That
gas
year
and
that's
the gas and electric bill.
Yeah, well, yeah, but for our sake, we consider the maintenance payment as an expense as well.
When approving.
When approving, yes, it's
Yeah.
and I can talk about more of this in detail, but 43% is the debt to income ratio that the bank likes to use. Okay, so I'll make it a little simple.
Okay.
Say you make $60,000 a year. That's $5,000 a month, right? And that's gross, not net, like what you're paid. The bank is looking for 43% of that, so that would be like a little over like $2,000, a little over $2,000 a month for your bills to be about that. Okay, so figure out what your maintenance, would be, add it to what your mortgage would be. Say the mortgage is like $1,100. I don't know what the maintenance is going to be, but that amount we want it like around $2,100 or so.